The world's wealth concentrates in places most people overlook, and the number one lesson about these hubs will blow your mind. Stay with me as we count down the 10 hidden truths and discover why the top spot is something almost nobody guesses. Imagine a city where low tax rates act like a neon sign for capital. Hong Kong's famously low corporate tax, around 16.5%, has attracted multinationals seeking to maximize after-tax profits. This fiscal friendliness, combined with a simple tax code, reduces compliance costs and encourages reinvestment. Companies can channel more earnings into growth, research, or dividend payouts, creating a virtuous cycle of wealth accumulation. While other jurisdictions compete with tax holidays, Hong Kong's stable, predictable regime remains a cornerstone of its appeal. The lesson? Strategic tax policy can be a powerful lever for attracting global capital. Up next, we'll see why location matters almost as much as the tax bill.
Surprisingly, geography can be a silent partner in financial success. Hong Kong sits at the mouth of the Pearl River Delta, linking mainland China to the Pacific trade routes. This natural gateway turned the city into a bustling entrepot, where goods and capital flow hand in hand. Proximity to massive manufacturing bases provides investors immediate access to supply chains, while the deepwater harbor accommodates the world's largest cargo vessels. The strategic position also fosters time zone advantages, bridging Asian and Western markets within a single business day. According to researchers, such locational benefits amplify liquidity and market depth, making the hub more attractive for traders and financiers alike. Next, we'll uncover how a robust legal framework builds confidence for those moving money across borders.
Few people know that a transparent legal system is the backbone of any thriving investment hub. Hong Kong operates under a common law tradition inherited from its colonial past, offering predictable dispute resolution and strong property rights. This framework assures investors that contracts will be enforced fairly, reducing the perceived risk of capital loss. Independent courts and a free press further cement the perception of accountability. When regulators publish clear guidelines, businesses can plan long-term strategies without fearing arbitrary rule changes. The lesson here is clear. Investors gravitate toward jurisdictions where the rule of law is not just spoken about, but actively practiced. Stay tuned for the next factor: how world-class infrastructure turns potential into performance.
Hidden in the bustling streets of Hong Kong is a network of infrastructure that fuels its financial engine. The city boasts one of the world's busiest ports, a state-of-the-art international airport, and an ultra-efficient public transit system that moves millions daily. Reliable power grids, high-speed broadband, and cutting-edge office towers provide the physical backbone for banks, fintech firms, and multinational headquarters. According to industry analysts, such infrastructure reduces transaction times, cuts operating costs, and attracts talent that demands a high quality of life. When investors see that a city can support both heavy industry and high-tech services, confidence soars. Up next, we'll explore how a vibrant financial services ecosystem multiplies those advantages.
Remarkably, the concentration of banks, asset managers, and fintech innovators creates a self-reinforcing ecosystem in Hong Kong. The presence of the Hong Kong Stock Exchange, a deep pool of capital, and a cadre of seasoned professionals draws more firms seeking partnerships, talent, and market access. This clustering effect leads to knowledge spillovers, where best practices spread quickly and competition drives innovation. Moreover, supportive regulators have introduced sandbox programs, allowing experimental financial products to launch under monitored conditions. Such an environment not only attracts domestic investors, but also serves as a gateway for foreign capital entering Asia. The lesson: fostering a dense, collaborative financial community amplifies a hub's global relevance. Coming up, we'll see why attracting top talent is the next critical piece of the puzzle.
When a city can lure the brightest minds, its economic engine roars louder. Hong Kong offers a cosmopolitan lifestyle, world-class universities, and a bilingual business environment that appeals to both Western and Asian professionals. Competitive salaries, low personal tax, and a vibrant cultural scene further enhance its pull factor. Companies benefit from a talent pool fluent in multiple markets, enabling smoother cross-border deals and innovative product development. Studies estimate that each percentage point increase in high-skill labor can boost GDP by up to 0.5% in financial centers. The takeaway? Investing in human capital through education, quality of life, and open immigration policies creates a sustainable competitive edge. Next, we'll discuss how political stability underpins all these advantages.
Deep beneath the skyscrapers, political stability acts as the silent guarantor of confidence. Hong Kong's one country, two systems framework, despite its complexities, has historically provided a predictable policy environment distinct from mainland China's central governance. This relative autonomy has allowed for consistent monetary policy, independent regulatory bodies, and a free press, all essential for investors assessing risk. While occasional tensions arise, the long-term track record shows resilience and a commitment to honoring contracts and property rights. Such predictability reduces the risk premium demanded by foreign investors, lowering financing costs for businesses operating there. The lesson is simple: a stable political climate, even if nuanced, is indispensable for attracting and retaining global capital. Up next, we'll uncover how innovation fuels the next wave of hub growth.
When technology meets finance, a new frontier emerges. Hong Kong has embraced fintech, blockchain, and AI, positioning itself as a testbed for cutting-edge financial services. Government initiatives, such as the Fintech Innovation Lab, provide funding and regulatory guidance to startups, while major banks invest heavily in digital transformation. This rapid adoption accelerates transaction speeds, reduces costs, and opens new revenue streams, making the hub more attractive to forward-thinking investors. Reports indicate that fintech contributions now account for a growing share of the city's GDP, signaling a shift from traditional banking to a diversified digital economy. The insight here: encouraging innovation not only future-proofs a hub but also creates fresh avenues for capital inflow. Stay tuned for the penultimate lesson on diversification strategies.
Even the most focused financial centers must broaden their horizons to stay resilient. Hong Kong has diversified beyond banking into logistics, tourism, professional services, and even creative industries. This multi-sectoral approach cushions the economy against shocks in any single market, such as a downturn in real estate or a trade dispute. By fostering clusters in various industries, the city creates cross-selling opportunities and a more stable tax base. Analysts suggest that diversified hubs experience lower volatility and higher long-term growth rates than those relying solely on finance. The lesson: building a mosaic of economic activity strengthens a hub's ability to weather global turbulence and sustain investor confidence. Finally, we arrive at the ultimate lesson that ties all these pieces together.
Finally, the most powerful lesson is that global connectivity creates network effects that amplify every other advantage. Hong Kong's time zone bridges Asian and Western markets, allowing investors to trade around the clock. Its extensive flight network, high-speed internet, and multilingual business community facilitate instant communication and deal-making across continents. As more firms and capital converge, the hub becomes increasingly valuable, a classic example of a positive feedback loop where each new participant enhances the whole ecosystem. Researchers estimate that such network effects can boost a financial center's economic output by up to 20% compared to isolated markets. The ultimate takeaway: fostering seamless global links transforms a city from a regional player into a worldwide financial powerhouse.
What a journey, seeing how tax breaks, geography, law, and talent combine to forge the powerhouse we call Hong Kong and its peers. Those lessons aren't just history. They're a roadmap for any city or investor aiming to ride the next wave of global finance. If you love this countdown, hit like and subscribe so you won't miss the next mind-blowing list we drop each week. Which lesson resonated with you the most? Drop your thoughts below, and let's keep the conversation going.